This is the most important period in my view for silver. I've never seen a time when gold prices have been doing what it has been doing. And on the face of all that, the gold to silver ratio still is at 90 and nobody is paying attention to the metal. When you look at technically, to me, it's a big quick run of $10 an ounce that could happen in the course of a month. That doesn't mean we're going to end there. I'm just saying that that's the first path, getting up to about $40 an ounce or so would be probably an important area, because if you look at the candles quarterly going back, especially since the 1970s, yes, silver prices hit the 50s and so forth, but the end of the candle was really around 40. So getting back to that 40 level is highly likely. It wouldn't shock me at all if it happens in the course of a month.
In a notable market development, precious metals expert Tavi Costa of Crescat Capital has presented a bullish outlook for silver, projecting a rapid $10 price increase within a month. Costa, specializing in macroeconomic trends, sees this as the initial phase of a more significant movement that could push silver toward $40 per ounce. This projection gains credibility from historical patterns, where silver has previously reached prices in the $50 range, but typically settles around $40. Current market conditions support this optimistic view, with silver maintaining positive momentum for 3 consecutive days and trading near $32.50 during recent Asian sessions. Market sentiment has been mainly influenced by uncertainties surrounding U.S. trade policies, with traders closely monitoring upcoming U.S. retail sales data for further direction. Adding weight to the bullish sentiment, Gov Capital's algorithm-based forecasting service has issued one of the most positive outlooks for silver, predicting a rise to $40 by December 2025. This forecast becomes particularly interesting when considering silver's historical performance, including its all-time high of $49.95 per ounce recorded on January 17, 1980. A particularly compelling indicator of silver's potential upside is the current gold-to-silver ratio, which has climbed above 90-to-1. This unusually high ratio suggests that silver is significantly undervalued from a historical perspective, especially given the strong performance of gold prices. Costa emphasizes this period as crucial for metal, noting that silver has received little attention despite favorable market conditions. Historical trading patterns indicate that silver typically achieves its best prices in early January or the previous year, though the metal rarely revisits its prior year price levels. While exceptions exist where prices have dropped below starting points, these instances have been relatively rare. This historical context, combined with current market dynamics and expert analyses, suggests that silver might be positioned for a significant move soon. Before diving in, subscribe to our channel and hit the bell icon to stay updated with our latest content and insights.
I've always been very bullish on silver. I've always been very keen on trying to buy and acquire assets that have silver exposure. But I have to say, this is the most important period in my view for silver. I've never seen a time when gold prices have been doing what it has been doing. And on the face of all that, the gold to silver ratio still is at 90 and nobody is paying attention to the metal. When you look at technically, to me, it's a big quick run of $10 an ounce that could happen in the course of a month. That doesn't mean we're going to end there. I'm just saying that that's the first path, getting up to about $40 an ounce or so would be probably an important area, because if you look at the candles quarterly going back, especially since the 1970s, yes, silver prices hit the 50s and so forth, but the end of the candle was really around 40. So getting back to that 40 level is highly likely. It wouldn't shock me at all if it happens in the course of a month. I do think that a lot of people are not paying attention to this. We're seeing production in Mexico actually continue to wane. Mexico, for those who don't know, it's one of the largest producers in the world. There's also the Peruvian production numbers are also very weak. And so from a supply standpoint, we're not really seeing a lot come online.
Right.
And the demand side of it has been driven by a lot of things. Yes, it's likely to be driven by speculation because of the link to gold prices. That's what's called the monetary metal aspect of silver itself. But don't forget, all the stuff happening with solar panels and all those things. I used to be a little bit, critical about some of those topics, but I ran the numbers myself. And if we're going to go to production or electricity consumption of the numbers that we're seeing in terms of the estimates for artificial intelligence and onshoring, which are real trends, are
Right.
going to force us to actually develop solar panels. And from my calculation, if we're going to be running things like Elon Musk has been saying, we're probably going to need about 5 years of silver production alone just for the US. And so
Wow.
imagine that for the rest of the global economy. And that, that's demand growing from, low single digits from a few years ago, that could be covering the entire, 5 years of supply of silver annually. So that's a big, big change in the dynamic that I don't think a lot of people are paying attention to. So I mean, if I would put on a scale of 0 to 10 of the last, 3 years of how bullish I am right now, it's at an 11. And
Wow.
I couldn't be more bullish right now, and especially because nobody else is. I think it's really happening. It's actually has to do more with the what's been leaking in regards to the potential revaluation of gold prices in the Feds and the Treasury balance sheet. And that would be probably one of the most important things that we've seen since the break of the gold window and so forth. And I do think this is going to be very meaningful. It's the government finally, recognizing the need for improving the quality of their international reserves in regards to the U.S. And in this environment that we've been facing of Eastern societies, particularly BRICS and other Eastern countries that have been accumulating gold right in front of the US. And we're starting to see now a shift where this recent rally, has been accompanied by a lot of Western societies actually being the ones participating on the rally. So the prior rallies that we've had in gold prices were much more heavily driven by those other economies, more authoritarian economies, basically, doing this as a strategic move to move away from U.S. Treasuries. And this time around, I do think that we're seeing Western societies starting to actually buy gold as well, which has been driving this big move, along with the revaluation idea. The revaluation is probably as I said, it's probably one of the most relevant things happening right now. And if that really occurs through the monetization of assets that Scott Bessent has been talking about, the Treasury Secretary, this could be profound in terms of the meaningfulness in markets. And I do think gold will go a lot higher as we see that materialize. And that's what's happening. I think it's just leaking that information further and further.
Tavi Costa has highlighted emerging profitability dynamics, pointing to Barrick Gold as a key indicator of broader industry trends. The notable 6% increase in Barrick Gold's stock price, following a $100 per ounce rise in all-in sustaining costs, has caught the attention of market analysts and investors alike. The market's positive reaction to increased production costs presents an intriguing paradox. Higher operating costs are a negative factor for mining companies. However, the rise in Barrick's stock price suggests that investors interpret these increased costs as a precursor to higher gold prices in the future. This market behavior indicates that investors believe gold prices will need to climb to maintain mining profitability, potentially setting the stage for a broader industry-wide pricing adjustment. The situation underscores the complex relationship between production costs, market expectations, and commodity prices in the mining sector. Let's get back to the interview.
We're about to see big changes in profitability of the mining companies. What we saw today with Barrick was just a glimpse, in my view. Barrick was up about 6%, showing, an increase of all sustaining costs of about $100 an ounce.
Wow.
Think about this. From a year ago, gold prices have gone up about $1,000 an ounce.
Wow.
So you look at the cost structure change from a year ago, we're talking $100, $200 an ounce. So some of these companies are taking on about $800 per ounce on increase of profitability. That's huge. I mean,
Yeah.
I don't think we've ever seen a time like this for the
Yeah.
mining industry. And so while some people are starting to understand and catch on to the potential for the changes, you look at the estimates are still incredibly low. My suspicion is that what we're going to see is estimates are going to be all broken in terms of we're going to see things, a lot of positive surprises across the board among most of the miners, and people are going to start understanding that this industry can make money. There are times that it makes a lot of money, and I
Right.
think that time is now. Look at the gold to oil ratio. That's one example. It's at its highest level in history if you exclude the craziness that happened in COVID. In other words, what does that mean? Gold to
Right.
oil ratio reflects into the profitability and the margins of, directly into the profitability of the mines. And so, what do you think it's going to happen? Well, it's probably extremely bullish for the mining industry. And so, that's another part of the market that nobody else is paying attention. You look at the mining index versus gold, and it's in the dumps. And that's because, yes, a lot of the mining companies have not done very well, but that's about to change, and we're
Yeah.
about to see leverage in terms of relative to gold prices, in my view. I've been of one of the guys that have been talking about for a long time about how I thought the dollar was actually not about to break and the dollar was going to do very well relative to other currencies. I
Okay.
think that has been the right view, especially against the Chinese yuan. If you remember, we put out many letters regarding how we thought China was going to collapse. And then now everybody's talking about the defaults and all these things about China.
Yeah.
And the time to be bearish in all those things was 5 years ago, not now. Now it's just reporting the news. And so, what is the next 5 years will look like? And that's the most important question. In my view, I think the dollar looks very peaky. And I don't like to own dollar assets at all. I actually think we're going to see the other side of that. We're going to see other currencies starting to do better. That does not mean the dollar is going to lose its reserves currency status. I do think that's a focus of the administration.
Right.
But when you think about it, the economy, the US economy cannot survive a very strong dollar. Simply cannot do that. I mean, this strength of the dollar we're seeing here is unsustainable. It creates, tightness of monetary conditions, and things are going to start to break if we keep seeing this. It's the same thing with interest rates. We got two problems here. Interest rates cannot be going a lot higher. We have too much debt.
Right.
And at the same time, the dollar cannot be too strong. So you're telling me that those two things are going to be capped. What do you think that's going to do? That's going to give that red light that you used to have on emerging markets going to shift to a green light. And
Right.
so I do think that there's a high potential for those things to do really well, emerging markets specifically, South America specifically, for many reasons. And I think we're about to see that turn.
The current dynamics between silver and gold highlight a significant opportunity for both metals. While gold prices have surged, the gold-to-silver ratio remains historically high, signaling that silver is undervalued. As gold prices continue to rise and all-in sustaining costs increase, gold and silver are positioned for potential gains. Silver is expected to benefit from the ongoing market undervaluation, while the profitability of gold mining companies improves with higher prices. What are your thoughts on the future of silver and gold? Will silver close the gap with gold, or will gold continue to lead the way? Let us know in the comments below. If you enjoy this video, don't forget to give it a thumbs up and share it with others who might find it helpful. Also, subscribe and hit the bell icon to avoid missing our latest updates. Thanks for watching.